And in our top business story, the UAE's labour market is seeing a major shift away from fixed-term contracts, reducing the likelihood of job disputes between employers and employees. A local report quoting a senior official from the Ministry of Human Resources and Emiratization has said that non-fixed-term contracts now make up 3/4 of the total issued. This change follows the establishment of 3 new decrees issued by His Excellency Said Ghabash, the Minister of Human Resources and Emiratization, which were launched at the beginning of 2016. During the past 2 months, the total of new non-fixed contracts reached 151,056, with fixed-term contracts at 60,153. Officials from the ministry added that by selecting more non-fixed-term contracts, it indicates that employers have identified the benefits of these. The trend follows the launch of new decrees and is contrary to what prevailed in the labour market previously, as fixed-term contracts were commonly used by employers. Ministry officials also stated that non-fixed contracts have positively reduced labour disputes, with data showing a large proportion of disputes arising between employers and workers abiding to fixed-term contracts due to ending procedures and the subsequent legal obligations. Arabtec has won a 1.7 billion dirham contract to build 1,100 houses on a 2.15 square kilometre plot at Mohammed bin Zayed City in Fujairah. The UAE Ministry of Presidential Affairs awarded the contract for the homes for Emiratis, which are due for completion in 2.5 years. It is the 4th major contract win announced by the company since the start of the year, bringing the combined value of deals won to almost 8.5 billion dirhams. Arabtec stated that it would adopt a more selective approach to winning new work when it announced its preliminary results last month for 2015, showing a 2.3 billion dirham loss for 2015. The company also told analysts that it would focus on the UAE market. UAE-based healthcare provider NMC Health expects earnings to increase by 45% this year on the back of recent and future acquisitions, as well as organic growth. According to the company's deputy chief executive, it could also tap loan and convertible bond markets to supplement the near $300 million it has available for acquisitions. NMC, like a number of other healthcare companies, is benefiting from substantial growth in the UAE healthcare sector as an increasingly wealthy population becomes more susceptible to lifestyle diseases such as diabetes. The company reported 2015 revenue and core earnings up 46% and 61% respectively last week. Earnings before interest, tax, depreciation and amortization is also forecast to jump by 45% to $240 million on revenue, up 28% at $1.2 billion. However, according to a Reuters report, NMC faces competition as rivals look to build market share, including An-Noor Hospital's $2.2 billion reverse takeover by Mediclinic International. NMC's Gulf expansion is on track, with the company planning to spend $20 million on opening fertility clinics in Oman and Qatar in the second half of 2016 after the receipt of approvals.